Even Stevens, I mean, it's too early to look at market breadth, but for what it's worth, 1,000 up and about 700 lower. That's how we are starting out straight out of the gates. We have, it's kind of flattened out even more. We just quickly look at the Nifty heat map, how the 50 stocks are opening, and then we look at some of the individual movers. Indigo is on one end, and I think you've got Bharti, which is on the other end. So naturally, I guess we'll, in terms of single stocks, look at Idea, Indus, etc. as well, in continuation of what we're seeing out there as far as Bharti goes. Surabhi.
Yeah, I was just looking at, JK Tyre. It's one of the stocks from the entire earnings basket, which is shot through. We'll be speaking with the management in the next, I think, 15 minutes or so. Their margin has gone up from 11.5% to 13%. Revenues up, profits up 60%. And that stock's on a tear right now in terms of just the result reactions. But anyway, talk about the large cap screen and see what is working. Nifty's up 24 points. So what's leading it? SBI 1%, Bharti Airtel 1%. Tata Steel continues to shine through. A couple of brokers have been upgrading some of these ferrous names. And I think it was Motilal. Motilal has also upgraded Tata Steel, sounding quite optimistic. Eicher Motors is putting on about 0.5%. L&T is chipping in with a small 0.5% gain this morning. Lever, again, so it's small little incremental gains across some of these stocks that I've just named. So what is not working for the market? Interglobe Aviation for sure, it's down about 1%. Remember, crude has been sustaining at 65. So that's a bit of a sentimental issue as well that's playing out. What else? Axis Bank, ICICI Bank, HDFC Bank. All the banks are seeing some profit taking. Nothing much, just 3, 4, 5 rupees off the shares. But that's pretty much the red side of the screen. Other than that, it's just extremely quiet. A little bit of an undecisive kind of start to trade. 25 points up on the Nifty for now. Nigel.
Well, a few stocks that are getting hit actually. HOEC is down close on 6%. So big hit on that one. Bata, for the time being, the pair of shoes is kept in the cupboard. You don't want to throw it out, but you may not want to keep it as well because the stock is down close to around 5.5%. So big downtick is what we're seeing on that one. PNB Housing Finance, another casualty of the morning. So these are some of the top losers this morning. However, there are positive earnings reactions. As will be said, JK Tyres, that's doing well. Sai Silks, well, that stock has already had a good run. I'll be speaking to the management in the next hour or so. So keep an eye out on that one. For the timing, those numbers look rock solid. Up and about 8% and flying high. Kfin as well is higher in today's trading session. Some positive news flow. I recall yesterday to the close of trade where we had highlighted, that there was an approved list with regard to the component manufacturing projects. And one of the stocks that were mentioned out there was Syrma. That's opened up with a solid gain of close to around 3%. So that's bounced back well. I recall this was one of the stocks that we had highlighted towards the end of trade yesterday. Keynes as well as Syrma. And Suraj Estates as well. Another rank underperformer came out with a set of numbers, I think, yesterday. And that one as well. Up and about, in today's trading session. So pull back from very, very depressed levels. Decent start, 16 to 20 points higher on the Nifty, but the breadth of the market is positive. 1,500 stocks advancing. Yes.
Just one more stock on the results, hits and misses. Canara Robeco AMC. I mean, look at it. Stock slammed down about 8%. Yeah. Their margins have declined over 400 basis points at a time when, overall other mutual fund businesses have been doing well. The market doesn't like that at all. So that's a sharp cut on Canara Robeco.
Absolutely. I think, naturally, Idea is in terms of sheer volumes, the number one volume traded stock. It's though up just 1.5%. And Keynes and the others, Keynes is there, number 3 in terms of volume-led gains. Mazgaon is up 2%. It's got large volumes. Indus is up 2%. I think we mentioned Sai Silk, Kalamandir, which is up 9%. NetWeb yesterday was up 3%. And it's gone up a little bit more. Fell to about 3,700, back to 4,000 in 2 days. Again, has done phenomenally well. Kfintech is up 4%. So, in 10 days, stock's gone from $1,000 to about 1,200. We've got, what else? Hudson, I think, was a big, massive mover, right?
Yeah.
Closed at 900 on Friday. From 900, it closed at, 1,080. Yesterday, and it's moving up more. So 1,110 on Hudson this morning. Welspun Corp almost 900. It's up about 2.5%. Volumes yet to pick up if I go down the list, but there is more action in that sense, which we will highlight. Supreme Industries reported numbers. It's down 3%. So along with Bata, that's the other one, which is taking a bit of a knock. We've Gautam Trivedi, who's now joining us right here in our studios. He's, of course, managing partner, Nepean Capital. Gautam, great to have you with us here. Good morning.
Good to be here.
Good to be back in the country as well. I guess you're traveling.
Yeah, I was out for 3 weeks to the US, both East Coast and West Coast, and I've come back with a lot of stories. So I'm happy to share some of them.
Tell us a few stories.
Have you caught the investors? Did you catch them in your bag and bring them to India?
Yes, you've seen the market going up, and you've seen them coming back. So I'm partly responsible for that. But I think overall the view on the market out there is that the domestic economy is so robust and so strong in the United States. Whether it's hotels, restaurants, flights, they're all packed. And if you look at the absolute numbers that the S&P 500 companies are putting to work in terms of cash deployment in this year, it's $4 trillion. That's all of India's GDP in just a single year. And of that, half of that is CapEx and R&D. And of the CapEx, about 27% is AI hyperscalers. So this is a number only of the top 500 listed companies. I'm not even counting the other, I guess, 4,000 companies plus the unlisted private companies. I mean, obviously, OpenAI's CapEx is not captured in this number. So that's the extent of, the absolute amount of money that's being spent. If I break that number of 4 trillion further, 1.7 trillion is actually buybacks and dividends. So this year, US shareholders / consumers will have 1.7 trillion in their bank accounts from buybacks and stock dividends. Next year's number is 4.4 trillion. So that's a 10 to 11% increase over this year. So the economy is very robust. I'm sure that message is coming out loud and clear.
But what about this whole debate around the AI bubble? What's the sense you got? I mean, are there more in the camp who believe that this is a bubble, but ride it till it lasts? Or is it actually, look at the layoffs, for instance. I mean, Amazon is a big story this morning, 30,000 people they're laying off. So, and then the cross-company deals that have been happening.
Yeah.
What's happening with the AI trade?
So the AI story is omnipresent. You could go to we went to Vermont and people are talking about AI. So it's all over. If you look at San Francisco, the Bay Area, I'd say about 80% of the billboards had some AI company advertising their product and, the use case. So, and I spoke to one specific investor who hosted a bunch of undergrad kids, about 30 kids for lunch. This is a bulge bracket firm, and they usually do that, meet students from other universities. And he asked them the following questions: how many of you use AI? Everybody put their hand up. Second question: how many of you use ChatGPT? He said about 80% put their hands up. I guess the others were using some other model. And if you look at ChatGPT, 800 million weekly users. That's 10% of the world's population. So AI is here. Is the business model broken? No. Is the valuation crazy? Yeah. Yes, it's crazy. And then, yes, a lot of people did complain about that. In fact, the question asked to me was, are there AI plays emerging in India? And in the listed, and of course, there's some in the private space, but specifically in the listed space, and we've seen NetWeb just now having a rally. But there are very, very few plays really at this point. So
does that come up as one of the reasons why? I mean, because everyone wants, a slice this AI big boom.
Yeah.
Bubble we don't know, but boom certainly. You think that's one of the reasons why India's kind of lagged a little bit?
No, I think India's lagged not so much from the AI issue. It's more to do with the fact that the valuation's historically been expensive. So I don't think anybody's complaining about our valuation. What's amusing is that at 22, 23 times forward earnings, the US market for Americans looks very, very expensive. Here, people would say, what's the big deal? It's only 22 times. It's really not that expensive, right? But when the issue is high valuation with an earnings slowdown. So you put that together, then we have a real problem.
Yeah.
So the slowdown or the selling in the last 12 months from FIs has been focused primarily because of that. If earnings come back, and that's the question everybody asks me, when are earnings going to come back? And is the revival in demand with the GST cuts, is that sustainable? And I guess we'll know the answer by the end of December as companies start announcing their numbers, or early Jan, should I say. But the fact is, the interest at this point in India, surprise, surprise, actually is very high in interest. Doesn't mean they're coming back next week, but the interest on what's going on in India is very high.
Your note is pretty interesting, Gautam, and you make a mention, and we actually would have loved to, that AI billboards on AI around. I think you put some pictures there as well. I wish we could show it.
That reminds me of college time, just the turn of the millennium. the dot-coms. Well, the internet companies lasted and they're thriving today, but not all dot-coms lasted.
Well, I made a analogy with when you go to Pune, 80% of the billboards are residential projects.
Yeah.
I mean, it's like as if this city has nothing else but housing.
Housing.
No, it's actually, I was in Bangalore. It's the same thing.
Same thing,
There's
right?
property
It's the
everywhere.
Property.
Yeah.
I mean, across.
Hopefully, we'll see more AI in Bangalore.
More AI in Bangalore. You write in your note that interest in China and Japan is peaking.
Yes.
That's the sense you got?
That's the sense I got. So let's make a case for India, and this is what I've come back positive, believe it or not, in spite of all that I've just told you. I've come back more positive on India than I was in the last, I guess, 12 to 18 months. First and foremost, if you look at our weightage in the MSCI, we've gone from a peak of 21% in September of last year, we're down to 15.7. We're now third highest in Asia, within the EM basket, not just Asia, so after China and now Taiwan, and we're number 3. Second is the average investor or allocator that I met is underweight India by 200 to 250 basis points. So that's obviously a huge underweight. If you look at the underperformance that we've had this year, and I'm just going to rattle out some numbers which even I didn't know until yesterday. This was the level of underperformance. Korea year to date dollar return 81%. Taiwan, China 35%. Hang Seng 30%. We're 5% dollar return. So a lot of this makes the case for India starting to look attractive. Plus, as you said rightly in my note, that interest in China and Japan clearly has peaked. 2 years ago when I was in the States, a lot of investors were talking about India and Japan in the same sentence, which was fantastic. But of course, that slowed down. As earnings slowed down, that went out of the window. But I think people are now asking the question that if China's and Japan, we think, have peaked in terms of absolute equity market performance, should we be deploying money in India at this point? And will earnings come back? And will the GST cuts result in a big revival? So that's, a lot is riding on the GST cuts.
Right. And I think, as you said, if earnings come back with the FIs being underweight and post our underperformance, hopefully we do see a gush of money. But earnings need to pick up first. Gautam, in your note, I was going through various aspects, and the chia seed pudding, that's an interesting one. Over the weekend, my wife served me one of those, and glad she's making it at home.
Exactly.
Looking at the costing out there, oopsie daisy, I think Babe's doing well, making it at home.
No, but I think, yes, I don't know how much she's charging you for it, but...
No. It's made at home, so that's good.
Chia pudding this small, literally, and I'm on TV, so I can show the size. It's this small. It's $10 in New York City.
Oopsie daisy.
So what is this?
It's just a chia pudding, this small.
Pudding. Okay.
Yeah, it's extremely good for health, Prashant.
Yeah.
I was told on this weekend.
But you need a couple of them, about $30 to actually make a real meal out of it.
And you've mentioned as well, hotel room rates as well are going skyrocket, right?
Exactly, yeah.
And okay, let's get back to another important factor for our markets, the trade deal. Our numbers not coming. I mean, we thought we would be top of the pops, maybe the first ones to get a deal. That's not happened. At least over the last month or so, some optimism is coming back. How important is that? India getting a favorable trade deal, in light of this entire foreign institutional holding here in India?
That's a very good point because, the question I think in some sense is that has the trade deal or the lack of it impacted our foreign portfolio investors from putting more money to work in India?
Has it?
To some extent, yes. Of course, it would be a emotional positive or incremental positive for India if that were to happen and whenever that happens. But I didn't get a sense that was holding back investors from putting more money to work in India.
Okay.
Because the fact is, we're only 80 billion in terms of total exports to the US, less than 2% of our GDP. So I don't think people really cared so much as they did for China and the US.
So the trade deal doesn't move the needle too much.
No. It brings back the annual spills.
It brings back a positivity.
It brings back sentiment, which brings me back to earnings. Because
that's right.
I was hearing you say that, and it's so true, right? We kept, saying that 22 times, 23 times, we're always an expensive market. I mean, big deal. If you have to be in India, you have to pay a premium.
That's right.
But those were the years when we could boast of 15% plus compounding growth for quarters together, right?
Yes.
Now, what did you tell investors? And they're asking you about this, right? Is earnings coming back?
Yeah.
What's the sense? I mean, not 1 quarter or two. This is a bigger issue, Gautam.
It's a bigger issue, yes, undoubtedly. And I think, but there are two things. Again, we've seen over the past 3 to 4 years, the money that's coming into the equity markets is driving the equity markets. And the money is coming into the equity markets not because of earnings growth or earnings slowdown. It's coming in spite of the earnings slowdown. So why is it still coming? Because the alternative investment avenues yield lower yields. So as a result, are you going to put money in a savings account? My HDFC Bank account is 2.5% pre-tax. A 1-year, 10-year fixed deposit is 6.5% pre-tax. I think we're doing a good job of marketing the equity markets through CNBC and the media. So people are putting money, every single day, every week into the equity markets. And the other statistic, which I may have mentioned before, is that of the 120 million unique investors in India, 5 states account for 48% of those investors. So the equity culture, which has started to spread over the past 3 to 5 years in India, which is great, has not even reached the halfway mark. We're talking of more penetration coming over the next 5 to 10 years.
Which is great, but it's also a bit of, and I don't want to be a big bear here, but that's also a bit of a risk building, right? Because that equity culture will keep growing and people from tier 2, tier 3, tier 4 will keep investing. Again, if you don't have earnings, then we'll be trading with our own money, we'll be trading at 24, 25, 26, 27 times because there's so much money chasing the same earnings pool. Isn't that a concern?
That is a concern,
A lot of supply as well, right?
And a lot of supply. Thank God for that. Yeah.
Thank God there's supply, because if the supply wasn't there, then the market would be even more expensive. I mean, the secondary market. So it's good to see that there's more supply coming.
I was speaking to an investment banker just yesterday, off-camera conversations, and he was like, let's face it, at the end of the day, you've got to get the animal spirits fired up. People have to start putting money to work to create capacities, to create businesses, even if those capacities lie idle for 1 or 2 years. Till that happens, and it reminded me of what Mr. Uday Kotak said, right? I mean, if you're just about selling businesses, doing the blocks, running family offices, and then you complain earnings nahi aa raha hai. Can't have it both ways, right?
Yeah, absolutely. And I think it's a good point. Gautam, in terms of markets is of course all about picking individual names, right? Individual ideas. So what are you doing?
So what we're looking at, financials are back. The good news is that you've seen a lot of M&A activity, strategic change in CEOs, restructurings. So the financial sector, and I mean the overall financial sector, not just the commercial banks, but even the NBFCs, the gold loan companies, etc., all of them are having events and triggers that are happening around them. So that's a very exciting space to be at this point. Secondly, I think going back to AI, there will be more AI companies, much like today there are a plethora of about 15 EMS companies that are listed. 5 years ago, Indians didn't even know what EMS stood for, and now we have 15 companies, and Dixon, of course, is the poster child, but there's so many others that are doing extremely well. So I think there are emerging businesses coming, new IPOs of companies that are very unique in different businesses, aerospace, defense. And I think AI, hopefully we'll see more companies IPO over the next few years.
Fractal's IPO is coming.
Yeah.
And I think next month, right?
I believe so, yeah.
But some $3 billion valuation.
Yeah.
So we'll have to see.
But Gautam, since you're in the studio, you've given us a couple of themes.
Yeah.
What have you all done? If you could name a couple of, with due disclosures, what do you like? A couple of themes you like?
So
if you could name, a few names as well, will be helpful.
Sure. Our way of playing AI actually is through power.
Okay.
So, based on what you've seen over the past 12 months, power is really the need, if you want AI to succeed. So the Wall Street Journal last week had an article which said that as of the end of 2020, 2% AI hyperscalers consume 2% of the US electricity total consumption. By 2028, it's going to be 12%. We'll have a similar situation here. I don't know what the numbers here today because we have only all of 1 gigawatt of capacity. But if going by all the numbers that are stacking up, going to 9-10 gigawatts, we're gonna need a lot more power. So in our case, we played a power as a theme that's going to be sustainable for the next multi-decades. We like TD Power beyond that. Our portfolio is on our website, so no, we're not concealing anything. We like GSW Energy. We like transformers and rectifiers, so we have a bunch of these stocks, and we like Inox Wind.
All right.
IPOs, just give us your overall sense on valuations and whether it's a decent party, well-regulated party, or if it's getting a wild party. Lenskart asking for 70,000. And some of the new companies obviously don't make profits also. I mean, and you have to look at, I think it's coming at 10 times sales. There's been LG, however, on the other side, Urban Company.
But look at LG. I mean, I'm glad you brought that up because the valuation of LG India is more than the valuation of the parent. The market cap is more than the market cap of the parent. So what does that tell you? That domestic investors just don't care. They're looking for the next interesting stock, and they want to hold it for from 6 weeks to 6 months to longer. But I think that's where,
Are you comfortable with the kind of asking numbers?
Well, the fact is, Shobhi, you've got to put on a capital markets hat. We all do that when we buy and look at a stock.
Yeah.
When we buy the stock, the first thing we think about is how will the market appreciate this number? If it's trading at 35 times, is the market ready for 35 times? I'll give you an example. We used to own Varun Beverages for the longest time. It traded at 45 times earnings when people said, gee, this is so expensive. The market's comfortable with this number, so why are we fighting this? So, I think that's the other way to look at this.
Yeah. As long as the growth can justify it, absolutely.
Exactly, yeah.
And also one point with regard to this IPO euphoria, right? At times, since we just spoke about Urban Company, the stock is sub 150 rupees. Just post-listing, very good story, long runway.
Yeah.
You need to be careful at times with regard to this listing euphoria, because the stock from 200, now it's at 150 odd, so you'll get your entry point. You need to time it a little bit better, I think so.
Absolutely. Okay, Gautam, great conversation. Thank you very much. And
Thanks
as
very much.
always,
Seeing you guys again.
Love getting those snippets from the ground after your US trip. So thank you for joining in on that. Have a good day. Well, with that, quick glance back at the market. Where are we? Okay, 65 points higher. So the dip is getting bought. And remember, both our technical experts were exactly advocating this. Wait for the dips, and if the dips come, then buy, because the trend seems to be very much intact on the upside. So right now, we're at the morning session highs. Let's focus on a couple of stocks. Going back to Bata, has it recovered? Not really. Still down 5.5%. Not quite in step with the investors' expectations. Manglam.
Well, there were a lot of wrong footings during this quarter for Bata. If you look at it, to take that punt forward as well, a couple of things happened. One, there was that transition from GST rates that impacted the last part of the quarter. In the middle of the quarter, we had, a disruption in one of their biggest warehouses. So that led to some sort of, impact. And more importantly, the company also looked at destocking some of their inventory at lower prices. So that impacted their overall margins. And then over and above everything else, we had a VRS that they started in one of the plants. And as a result of which, there was an exceptional loss of or exceptional expense of over 8 crore rupees. So all of that meant that right from the top line, the revenue declined by about 4%, and it wasn't on a high base either. Last year as well, the revenue was absolutely flat. And then because of the inventory markdowns and all the disruptions, etc., the EBITDA fell by about 17%. The company had to increase their marketing spends as well. And finally, the exceptional expense meant that it had a further impact on the net profit. And from over 52 crores, the net profit actually fell by 74%, all the way down to 13.8 crore rupees. The company said there were deferments of purchases, but they had a couple of green shoots. The one was that, there were signs of recovery in the festive season. So that's something that we'll obviously get a little more color on. And we had premium products like the likes of Hush Puppies, etc., doing a lot better. So could that mean that maybe the worst for Bata is over or not? That's a question that I believe that the management will have answers to. But for now, on the back of a quarter where a lot of things went wrong, the stock down 5%.
Okay, well, Mangalam, thanks very much for that. We'll take a quick commercial break here. Up next, we connect with the management of JK Tyres and Industries for their second quarter earnings, coming up in just a bit.
Welcome back. Well, keep an eye out on a few stocks in the broader markets. We have Welspun Corp. The stock is showing strength after a while. Just looked at the exchange, and later this week they'll be reporting their numbers. The street, it seems, are coming to terms with that. Remember, from the recent peak, it saw a sharp correction. I think 950, 960 odd, went down to around 820, 830 odd. And last two sessions, actually, it's moved up. So maybe anticipating stronger numbers on this particular name. That said, let's focus on a good result today. JK Tyre reported a healthy set of numbers. The India business has been leading the growth. The Mexican business as well delivered a steady performance. To discuss this and what's the way ahead, we're joined by Anshuman Singhania, the Managing Director at JK Tyre. Hi, Mr. Singhania. First of all, good morning and congratulations. A good showing. The street likes what you've delivered. I want to focus on the profitability aspect.
Thank you for having me on the show.
It's a pleasure, Mr. Singhania. Let's get a couple of numbers out of the way, though. The margins, that's a pleasant surprise. You've delivered close to around 13% in terms of EBITDA margins. Even your gross margins, they as well are looking quite good at around 39%. Now, we know that raw material cost has perked up a little bit. What's the sustenance in terms of both these two numbers, EBITDA margins as well as gross margins? Please go ahead.
Yeah, sure. Indeed, JK Tyre has done well. Our margins have definitely expanded based on the raw material decrease, plus our push on premiumization. Our product mix has enriched, and we have also got a lot of excellence in our operational excellence as well. So going forward, it looks like the demand is going to be steady thanks to the GST and the general sentiment which is picking up in the rural segment. And there has been an uptake in the overall automotive industry. So we are very much hoping that for the full year, going forward, H2 should be looking good.
Okay, all right. So you believe margins could sustain around these levels, in the vicinity of these levels?
Yes, margins would sustain in this level going forward.
All right. Let's focus on the larger part of your business and the India business. You've mentioned 15% volume growth in the domestic market. Could you tell us where's the strength coming from? The replacement market, the OEMs, if you could give us a brief idea in terms of demand trends?
Yeah, sure. So we did a double-digit healthy growth in our domestic market, and our products like truck radial and passenger saw very steep growth in terms of the volumes, and even the farm, even in the OE and the replacement, did exceptionally well. So we see this growth being continued, at least in the next quarters as well.
Anshuman, hi. Good morning. Great to have you on the show. Surabhi here. Can you expand on that point? Because that's really not a million, maybe $1 billion question. Whether the post-GST cut pop, this festive pop that OEMs have seen, whether this is really going to be a lasting trend for the coming many quarters. What's your sense? What are your channel checks telling you? And between the two markets, OEM demand and replacement market, for the second half of the year, what will the trends be like in both of these segments? And just break down that volume estimate. You're saying 15% volume growth. Where will it really come from?
So I think starting from the OE, in the CV market, which was very much muted, we are seeing a mid-single-digit growth coming in from there. In the passenger, we are seeing a strong single-digit or a high single-digit coming in from the passenger as well. Even in the tractor, we are seeing a good, strong single-digit to a double-digit growth coming in. So overall, the automotive industry looks healthy. So we are seeing a 7 to 8% growth in the automotive industry coming in. In terms of the replacement market is buoyant because of the GST. I believe that the dealers have flushed out a lot of inventory. So that gives room to the fresher sale. We have seen a strong number of TBR volumes grow by 22%. We've seen in our passenger line volume, which grew by about 16%. So that's all indicating a healthy double-digit strong growth. And with our new introductions of products and going into the white spaces, I'm sure we'll be able to keep up this momentum very strong.
And would it be possible for you to share roughly, I mean, if you talk about the total top line, what is the breakup between OEM and the replacement market for you across the portfolio?
So the replacement would be about 60% and 40% would be the OE.
And you would expect this ratio to continue even towards the end of the year, the 60-40?
Yes, we would continue. We see that to continue in this proportion.
Okay.
Mr. Singhania, morning. So, one question a lot of investors keep asking is this GST-led boost to demand durable across categories, cars and everything across the board? So if I were to put that to you, because you would get a sense, right, from OEMs, how they are planning, because if they're seeing demand ahead or not. I mean, how would you answer that?
No, definitely the GST has given across the board a good boost to the overall sentiments of, and hence the demand across the sector has picked up. In terms of we seeing the robustness in terms of the OE, whether it is the CV or the passenger car vehicle, which is in terms of good production numbers which are coming our way. We are the largest in the truck radial space where we are catering to the OEMs. And we see a good boost in the entry-level vehicles also coming in the car. And I think that is going to be playing out going forward in the subsequent quarters as well. So overall, we see a healthy growth which is going to be coming in from OEM. And
so November, December, I mean, this will sustain. That's my question. Or you think once again from inventory getting corrected, you'll end up in a month or two, you'll end up with a situation of excess inventory. That's the fear.
No, actually, the underlying demand has been very good. In terms of the rural demand, which is picked up, also the infrastructure push, which the government has been doing, that is leading to a lot of demand generation, especially in the trucking segment as well. And there has been a boost in terms of the cars as well. So that sentiment combined with rural sentiment, which we are seeing in the farm and the two, three-wheeler. So that is a good indicator that it is showing that it is going to be continuing going forward.
Okay, all right, Anshuman, we'll leave it on that note. Good quarter, and you're expecting it to be a good second half as well. Shareholders will definitely hope it plays out that way. Thank you so much for joining in, and all the best for the rest of the year as well. Well, from JK Tyre, which has been reacting quite positively to numbers, to Bata India, which has had a bit of a rough quarter. Stock still down about 5%. After the company reported pretty mixed set of numbers for Q2. A lot of the major parameters are actually down as the company has been going through the GST transition. We have Gunjan Shah, Managing Director and CEO at Bata India, to walk us through some of these trends. Gunjan, thank you so much for joining in. So for the benefit of our viewers, I'm just running through the numbers again. Your top line's down by about 4%, and profits have also been slightly sluggish, if I could say. Margin is at about 18% versus almost 21% same period last year. So just tell us, is the bulk of the GST pain over? What is happening with the inventory, and what is happening with your pricing strategy? Because that threshold where the lower GST comes in is at 2,500 rupees. So, will there be a propensity, say if you had, a product at about, 2,800, will there be a tendency to now reprice it in such a way so that it gets the benefit of the lower GST? So therefore, how should we expect this transition to play out over Q3 and Q4?
Sure. Hey, hi to your viewers. Good morning and belated Happy Diwali. It's been a quarter that's got impacted by the transition, but we were well behind it on the 22nd of September when the effect went into place. It did obviously impact trade and consumer sentiments and therefore deferment of purchases. But I think post that there has been I think a good uptick and recovery, in which we hopefully will pan out over the next couple of quarters. From a pricing point of view, Surabhi, what we have done is we have, as was also suggested and indicated by the government, we have passed on the entire benefit. The portfolio that has got, obviously will get repriced because of this is almost about 80%, and that has already been done. So that's already in market, right? So we will basically want to ensure that we stay with the principles of passing on the price benefit to the consumers. In addition to that, because we wanted to manage and lubricate the transition and therefore clear out inventories, that did have an impact on our gross margins temporarily till about 22nd. We are hopeful that all of that should now recoup back as things stabilize post the 22nd.
So, some numbers here will really help. I mean, even if let's not look at Q2 alone, let's look at first half. Mangalam has helped us with the numbers there as well. Revenue is up just 2.2%, and your first half margins are at 19.7%, just south of 20%. So let's talk full year now. By the time this year ends, all this would have normalized, right? So full year, what's the expectation for top line and margins?
Yeah. So we are hopeful, obviously, of this recovery will sustain going forward. And in fact, actually, in my view, I think GST is a structural piece and therefore should have a structural demand recovery. In addition to that, there are a few other initiatives that we have done. I think one of the largest ones has been zero-based merchandising and the refreshing of our stores. So we have already hit about 250. We plan to hit 400 by the next quarter and 800 by middle of next year. So I think that refresh is giving us significant bounce back in terms of like for like in the stores that we have done. So that plus, I think some of the collection that we have launched, I think the Victoria Ballerina collection has been a big success. We expanded to almost a full store network as well as with much larger volume and variety, and that should give us an uptick. So I think a combination of the GST structural impact, some of the store refresh that we are doing, as well as the collections and the stories that we plan to present to consumers should augur well for us going forward. From a margin perspective,
Mr. Shah, sorry, just to come in, could you, for both revenue and you characterize the environment, would you be able to put some numbers to it? H2, what kind of growth?
Nigel, but what I do foresee, obviously, is a significant amount of bounce back coming through with, obviously, the GST transition pain under the belt.
Prashant here, sir. But you don't think there is, you won't be able to sort of put some numbers on it?
Yeah,
your assessment.
I will refrain from giving you a forecast, but we are pretty positive post the 22nd from the response.
No, but can you sustain a 20% margin with the repricing? Like you just said, 80% of the portfolios had to be repriced. So can you still do 20% margin?
No, so we've done it. It's basically impacted, about 6% for pricing of products which are below 1,000, as well as about 11% for the ones that are above. And that is margin neutral. So that doesn't impact margins at all. I think this impact that we saw last quarter was largely because of the transition should bounce back.
All right. Hi, Mr. Shah. This is Nigel here. Good to speak to you. Premium products as a percentage of your total sales mix, how much is it?
It's about 30%. And obviously, even last quarter, despite the transition pains, premium has done well, which is Hush Puppies, Power, Floats, etc. So that continues to have much better traction. But we are hopeful the lower end also will see much better traction now with the tax arbitrage coming down.
The ideal sales mix be if premium is at around 30% right now?
Yeah.
What would the ideal mix be? Where do you see that number headed?
So it'll keep on creeping up as premiumization continues in the economy and consumers as well as in our portfolio. So my sense is that this will keep adding about 2-3 percentage points every year. So it should reach in the next about couple of years, I think about 40% plus.
Can you tell us about your e-commerce sales plan as well? What is it at? Where do you see it headed? And the measures that you all are taking in?
Yeah, so e-commerce has been our fastest growing business, just like most other players, right, over the last 5 years now. Now it is low double-digit contributions to us. We've also been very conscious of making sure it is accretive in terms of profitability. So it's not been just, sell at the cost of anything. So we've been very conscious on that front. And I think we are expanding going forward. I don't see a reason why it should not be our fastest growing channel going forward. From low double-digit contribution in the next 2 or 3 years, we should be at about 20%, north of 20% contribution. So it will be a fastest growing and will drive growth for us.
Mr. Shah, just to press, without asking you to put numbers to it, but revenue growth has been low single digits. Do you see, I think margins are below pre-COVID levels. could you give us some sense of how this is likely to shape up? Some analysts are cutting your expectations from where you are for FY26, FY27, etc. So how would you look at it?
Yeah, no, thanks, Prashant. So I think the way we are looking at it is that margins per se, I think, are a combination of both the leverage on top line as well as in terms of cost structures. I think in terms of cost structures, I feel very comfortable in the space that we are with the kind of structural corrections that we have done, including the one-time VRS that we have done even last quarter. So we've been more than happy to make sure that we invest in those cost structure corrections that we are working for the long term. So I think there we are pretty comfortable. Once the leverage on the top line comes through, the margin should bounce back.
All right, and there'll be some annual savings as well because of that VRS, right? You want to quantify it very quickly?
Absolutely. They give us paybacks within less than 3 years. So there will be, savings recurring for us perennially.
All right, the shoelaces seem to be tied and you're set for a bigger sprint in the time ahead. We wish you well, Mr. Shah. Look forward to chatting up with you. Past quarter may be a little bit softish, but you're guiding for better times ahead. So we'll track you to some of these numbers. Have a good day ahead. Well, let's move on then and let's shift focus to our special segment, Quarter Se Quarter Tak, to get you expectations from every sector. Today, Vinny is joining us. She's going to tell us what we expect from capital goods. Vinny, over to you.
Hi, good morning. So in terms of capital goods, this time we're expecting a mixed quarter coming for the capital good players in September quarter, end of 30th September. Now, a robust order book, that is what we're going to be starting with. That will start converting into higher revenues, and selective companies will see margin expansions. Talking about the order inflows now, in terms of order inflows, they're expected to see a bit of a drive coming in, and that will be something that will be driving the narrative of Q2 FY26. CG Power, that is expected to stand out in terms of order inflows, 27% growth on a year-on-year basis, and closely followed by Hitachi Energy, 17.8% YOY growth is what one is expecting there. Siemens is expected to deliver an 11% increase in terms of order inflows. Now, looking at ABB, they're expected to see a steady progress as well, while Thermax, that's where we could see a bit of a moderation coming in terms of order inflows, a decline of 11%. BHEL, a decline of 29% is expected in this quarter, maybe because of the legacy headwinds they're facing in terms of the orders. Now, other than that, when you talk about revenues, revenue conversion is expected to be good, and the backlog of the order book that is there, that will be something that will be supporting the overall revenue growth for the companies. Now, broad-based growth is what we're expecting across all the capital good players. CG Power is going to be taking the top spot with 36% growth expected there. And then moving on, BHEL and Hitachi Energy are 19 to 20% growth is what we're expecting there. Now, coming to Cummins, ABB as well as Siemens and Thermax, that will be providing some bit of a mid-single-digit to high single-digit growth is what we're expecting this time from these companies. Shifting focus to the margins. Now, that's a very divided story among all these companies. Hitachi is expected to see a very good margin expansion, 500 basis point. And then following, obviously, CG Power, Cummins, Siemens, all of them are seeing 90 to 60 basis points, somewhere in that range is the expansion expected there. But what is not expected to do well, ABB, Thermax, BHEL, in terms of margins, they are expected to see a compression coming in this time. Commodity prices and some of the legacy project issues for BHEL is one concern that comes in, especially over there. Now, overall, just summing it up, Q2 FY26 expected to be a mixed quarter supported by strong order book backlogs, broad cost rationalization that will support the margins, moderating commodity inflation is supposed to support the margins as well. Execution, that is something that everyone will be keeping an eye out on. Private capex story, where is that headed? As well as in terms of prolonged monsoons, has that impacted the EPC side activities? That will be key to watch out for. Valuation surely have moderated from those peak levels, and that is indicating that slowing order inflows that one has seen coming in. Capex spending reduction over there as well. So keep an eye out on that. Only Hitachi Energy as well as CG Power are seeing some of those premium valuations, but they've come off the peak as well.
Okay, all right. Thank you very much for that, Vinny. That's a comprehensive wrap, and it sets us up for our conversation with Harshit Kapadia, Vice President, Industrial Defense, Railways and Consumer Electrical Space, as well as Durables. It tracks a whole bunch of these capex-intensive companies and stocks at Elara. Harshit, thank you so much for joining in. So let's start with the big boys from the capital goods space. Let's get your highlights and trends. Purely in terms of good execution, a pickup in growth. Which are the companies that will perhaps shine in Q2 and going forward in H2 as well?
So companies which will see a very strong growth are mainly power equipment related companies because they have a very strong order book and largely driven by government as well as the power capex which is ongoing. That would mean companies like Siemens Energy, Hitachi Energy, GT&D, Quality Power, power industries, so cable and wire companies. These are some segments and companies which will see a very strong growth. Partly we have seen, KEI and Polycab reporting their numbers, which has been in high double digits as far as volumes are concerned.
Okay, so some of the power equipment makers would be in double digits. Got that point. And what about the margin profile? I mean, are you expecting any significant changes in Q2 or Q3?
So as far as Q2 is concerned, we think margins for at least the equipment companies, the power equipment companies should be better. Though going forward, that is in H2, we are expecting competitive intensity to increase, and especially we are hearing Chinese competition is also slowly increasing in some of these segments, which is something which we'll be watching out for very keenly. Hence, H2, there could be some pressure. But given that revenue growth momentum would be there, assuming that raw material stability is there, margins should be in the range of around 14 to 15% for most of the names.
That's interesting. Chinese competition in which segments and what kind of, what part of the power chain that you're anticipating in H2?
Mainly on the power equipment side, that is from high, medium voltage, and partly some of the HVDC projects as well. So there has been some rise in competition.
Okay. The good thing is, from an investor perspective, Harshit, that these stocks are now, they're a little off the peak. They were all quoting at 90 times, 100 times forward earnings, right? At the peak of the whole capex bull market. How do you find the valuations now? Where is the risk reward the most favorable? And what are your top picks?
So valuations are still high. It's not very high, given that the order inflow momentum has been a bit on the weaker side, except for power. There has not been much growth as far as capex is concerned, especially the private sector capex. So we would still expect some moderation to happen as far as valuations are concerned. Though there has been some activity happening on the transmission side. A week back, there was a report on the hydropower transmission capex. They are looking at close to around 2 lakh crores of transmission capex. Apart from that, the overall renewable transmission capex is looking at close to around 9 lakh crores. So we have a decent pipeline as far as transmission is concerned. So EPC is one segment which will be very positive about. Apart from that, on the power equipment side as well. So within this, what we like is Case International. We like Siemens Energy. We like Hitachi Energy. And KEI Industries. This is something that we like. Something that we don't cover and we like is Elecon Engineering, Quality Power, and Apar Industries.
Okay, so you like players on the EPC side playing the transmission story. Nothing from the bulge bracket big MNC power equipment makers themselves, the Siemens and the ABBs of the world?
So if you look at over last 1 year, a lot of these companies have transitioned away from the power equipment to non-power equipment because ABB got divided into Hitachi and Siemens got demerged with Siemens Energy. So large part of the portfolio for ABB India as well as for Siemens India is more towards private capex. The trigger which could be there for Siemens could be on the mobility side. There is one large tender which is coming for the local trains, which is in Mumbai. They want to completely air condition it. That is a big tender which is going to come out probably in Q3 end is when we expect. So that could be a trigger for Siemens India. Apart from that, private side, it's a bit on a slower side at this point in time.
Okay, all right. And that's going to be an interesting one, yeah. I mean, fully air-conditioned Mumbai locals, definitely something to watch out for. It's going to be a big story overall. Thank you, Harshit, for flagging off all that we need to watch as we get into Q2 earnings with these companies on the capital goods side. Thanks for joining in. You have a good day. Well, we'll take a break on that note. On the other side, Manisha with the latest commodity market action.
Welcome back. We've got markets in focus. Nifty is down about, 65 points. So 25,900 or so is where we are at. OpenAI, some announcement at the bottom of the screen. We should have it back up. Look at the turn that we've seen, by the way, as far as the index is concerned. Maybe just look at the Nifty Bank before we go any further. There as well, there is a sharp sell-off which is happened. I mean, the high was made for both the Nifty and the Nifty Bank at about 935. And from there, it's been a very, very sharp reversal, which we have seen. Small cap index, I think, has also seen a sharp reversal. And I think something similar should be the case for the Nifty mid cap index as well. Yeah, all similar kind of price patterns. A strong start, open higher at about 930.35. There has been a turn in that sense, which has happened. Well, what's the commodity sort of story this morning? Precious metals are seeing a bit of a pullback. We touched upon oil earlier. Manisha, which one is it? What are you tracking?
Well, I'm looking at precious metals, Prashant, at one point in time, it was all about new all-time highs. But in the last couple of weeks now, we're looking at profit taking. If anything, if the overnight is anything to go by the way, we've seen a 3 and a 3.5% of decline come in for gold and silver, both of these. And with this, we're now trading at 2 to 3 week lows for these. Last 1 week for the precious metals also has turned into negative, and that has pulled a month-on-month chart also in the red when it comes to gold and silver. I mean, with the wave that we've seen most of 2025, this is a new chart that we are looking at. But when you look at this year until now, it clearly has been on the positive side even now. So you have gold, which is still 52% higher, and silver with 62% of gains stands tall. I just want to take one thing away from that chart, and that really is about the silver prices there. So clearly, gold is now trading below $4,000 an ounce. We've seen 43.81 as an all-time high, and from that 4,000 important psychological level has been given away. We've seen 39.60 as a low as well in the New York session yesterday, and that's pretty much that we have seen come in for silver as well. Should get that chart on your screens as well, because for silver, 54.5 was an all-time high, and from those kind of levels, we've seen silver prices decline to around below 48 as well. 3.5% of a decline overnight markets. That would mean a lower circuit for the Indian markets, and that's exactly what we saw on MCX yesterday. Today morning, we haven't seen that trade open yet. MCX did say that they'll start at 9:30 and then 9:45 and then 10, but we haven't seen trade start yet. And there are some reports suggesting that it would be by 10:30 or 10:45 that MCX perhaps could be trading therein yet again. Take a look at what really seems to be happening into the markets, especially when it comes to precious metal right now. One, it is pure profit taking. The markets were overheated, overbought from the beginning of September itself, and some correction is what the markets were perhaps waiting, watching out for, and is what you're looking at right now. And then it also is about the US and China closing to a major trade agreement, perhaps, is what the markets are reading in. The US president is meeting Japan premier today. There are more tariff agreements happening, and that has led to that safe haven buying coming out from the market. And we've seen risk appetite money go back in case of equities there. Strong withdrawals from the gold-backed ETFs also is weighing onto the space. And then the expectation that the US Fed meeting, when that happens by this weekend, you could be looking at 25 basis point of a rate cut coming in yet again. That is something that the street has already factored in, by the way. Come to Indian markets then, and much of that premium that we were talking about in case of gold and silver all seems to have gone away. But the good thing that has happened is that with this kind of a profit taking that we have seen on the street, the festive demand has come in on the stronger side there. Indian demand also has been higher for investment. So during the Dhanteras Diwali week, people tell us that there was more bar and coin sale rather than jewelry. So clearly, investment is what we saw happen there. Also, when you look at the Indian imports itself for the month of August, for a 10-month highs, the ETF buying has been record high for the month of September. So buying in that sense also has been quite strong. And the markets really are reading into this decline in case of gold prices as temporary, as consolidation, and a longer period consolidation perhaps could take prices higher yet again. That's exactly what most banks and brokerages are still putting forth. So you have JP Morgan telling us that they still expect the prices to be above $5,000 an ounce in next year. CPM Group talks about 4,500 in this year itself, and 5,000 is a level that various banks and brokerages have talked about, including Metal Focus, Citi, Bank of America, etc. You have EADRNE also talking about 5,000 rather, and Metal Focus on silver believes that while we might be trading below $50 an ounce right now, but next year then could be $60. So consolidation, well, yes. Correction, yes. Profit taking, yes. But long term, still bullish.
All right, Manisha, thank you very much for that. By the way, talking about commodities, look at the dominant commodity exchange, right? MCX trading yet to begin. And there was another alert which came up. So third time in 4 months. I mean, how can it be that this is, basic trading which is yet to begin. They're not being able to. And at the moment, we don't have further information from the exchange. We're trying to connect with them and maybe ask them to join us in the air as well to ask them what really is going on. On that note, let's just take a quick commercial break here. On the other side, it's our segments, The Economy, Lata in conversation with Samiran Chakrabarti of Citi, Harish Damodaran of the Indian Express on the strength of rural demand after the just ended Kharif season.
Welcome to It's the Economy. Much is being speculated about urban festive consumption, but has rural consumption held up? And more importantly, will it hold up in the second half? Rural India has recently been hit by two worries. One, food CPI or food inflation has been negative for the last 4 months from July to September, which of course impacts farmers' purchasing power. And secondly, the Kharif output for 2025 may be hit by the late rains, especially in the state of Maharashtra and adjoining states. To get an idea of the state of the rural economy and rural demand, I have with me Samiran Chakrabarti, Chief Economist, Citi India, and Harish Damodaran, Rural Affairs Editor, and by far perhaps the best expert you can get on Indian agriculture from the Indian Express. Harish, Samiran, thank you very much for your time. Samiran, first to start with you on the scene that we already know. How good was rural consumption up until September or October?
Thanks, Lata. So what we were observing was that the positive effect from last year's good Kharif crop as well as this year's good Rabi crop was feeding from agriculture into non-agricultural activities in rural area, because rural is somewhat of a circular economy. And that was leading into a much better employment growth in rural, not just agricultural employment, but also in non-agricultural sector, which in turn was feeding into rural wage growth being at almost at an 8-year high. And if you put all of this together, this was giving a much more sustainability to the rural demand prospects than what we had seen in the past, where the moment one crop fails, that would have led to lower rural consumption. So this time, this has been a much more sustained up move in rural, contributed both by the fact that the agricultural part was good, as well as the fact that this was feeding into the non-agricultural part of rural also through the labor market channel of higher wages, etc., which we have seen starting to reflect in much better tractor sales data, much better two-wheeler sales data. In fact, even the currency in circulation data, which is a proxy for rural demand because a lot of transactions happens in cash, that has also seen a significant, almost 9% plus growth. All that is pointing towards a much better rural situation now than what we would have thought a year or so back.
Actually, yours is a very rich report. You are telling us that rural wages also are something like at a 10-year high, Samiran. If you could just elaborate on that part also, did that come as a surprise?
So yes, I mean, there has been for a very long period where rural wage growth was, at least in a real sense, adjusted for inflation, not moving up much. Finally, we have started seeing this happening. And this, our suspicion is that this is because the rural labor market is becoming tighter. We are seeing from high frequency employment data that both the agricultural employment as well as the non-agricultural employment, and we sometimes underestimate the extent of non-agricultural employment in rural areas. The manufacturing employment in rural, that has seen significant growth. I mean, we have had almost 12 million new jobs getting created in rural manufacturing in the last 1 year. So this has started showing up not just in the fact that the Narega demand is down significantly year over year, but also in the higher rural wages, which, as I said,
now happening to the metros, whereas we are seeing a lot of migration happening, maybe within, say, 200 kilometers of the origin of migration, Okay. So maybe tier 3 cities, tier 3 towns, district headquarters, those kind of things. And probably, the cumulative impact of all the, the investments in infrastructure, whether it is the highways, whether it is communications. I think all these, are having some kind of a cumulative effect, and probably agriculture, I mean, the good monsoons, etc., is a kind of a sweetener on top of it, But what Samiran is talking about could be probably a more secular kind of trend, where you have wages which are basically non-agricultural sector growth. Probably it could even be things like construction. It could be, say, services. And which is happening in small towns. In the provinces. And so I think that is maybe the big change which is happening, and probably it's now accumulating, and this will always happen with cycles. And as Samiran is saying, it's happening after 8 years. Yeah. Okay. So I would agree with what he's saying.
Okay. Now, this is a new trend that economists and policymakers have to grapple with. We're probably not looking at data in tier 3, tier 4 cities. We stick with metro and perhaps tier 1, tier 2, and then rural proper. But something in between is getting lost. But Harish, the more important thing I wanted to ask you is, are the late rains spoiling the picture? We had a report from Financial Express, your sister paper, saying that it's possible that 171 million tons that the first estimate put out may not be reached. That record won't come and we may actually harvest a little less. How bad is the late rains in terms of impact on Kharif output?
Definitely output has been impacted. There's no doubt about it. Okay, but what we must remember is that we had a very good Rabi crop. The last Rabi crop, I think it was a real bumper crop. And in terms of supply, like for example, we were running very low stocks of wheat, very low stocks of sugar, very low stocks of pulses, etc. So, and that is why you had, I think we underestimated the impact of the last El Nino, because I think we had record food inflation, very extended, I think 1.5 years, maybe.
Yes, 18 months. I remember very well, 18 months we had food inflation between 8 and 11%.
Yes. So I think the turnaround started happening from the beginning of this calendar year. Once it became clear that we are in for a bumper Rabi harvest, So after the bumper Rabi harvest, then we had early rains. The monsoon came early and also left a little late. So obviously there has been some damage. Definitely, I'll say a lot of the like for example, say soya bean, even pulses. So in many places there has been damage. There's no doubt about it. But all these rains have also helped kind of recharge our groundwater aquifers. They have filled our reservoirs. So I think we are going to look. I think we are looking at a bumper Rabi harvest. The coming season is going to be bumper. The winter has set in. Seems to be likely to set in a little early. Because you always have the winters coming in after Diwali. This time the Diwali was early. So I think by October end, I won't be surprised we'll start seeing sowing of wheat.
Now, Harish, I wanted to ask you if this sustained negative food prices, negative CPI that we saw, food inflation that we saw, plus this lower than estimate Kharif, will that dampen rural demand in the second half?
Yes, in a sense, definitely, in terms of immediate income. But, see, farmers are generally, they are more forward looking, they look at I think the overall sentiment in terms of supply, I think is much better, and farmers generally, respond whenever the monsoon is good, when there is enough water, when there's enough soil moisture. So I think I would say that, I think you can see the real effects of the good monsoon, maybe from April onwards, April 2026, and that combined with what Samiran is highlighting, about the growth of the non-agricultural rural sector. I think we may be in for some kind of consumption revival in the long run.
Okay, actually, the rural MSP, the Rabi MSP also seems to be fairly high. The Press Information Bureau, PIB report says that on wheat, it is 109% rise over the cost. Or margin over the cost.
So, yeah. But it all depends whether farmers will realize those prices, But I think they seem to be quite serious about procurement, I think procurement of both pulses and oil seeds. I think they are focusing a lot, And so everything rests on how much the government will kind of procure, I think that's what matters. But overall, I would say that, I think the real swing states, just like you have swing states in elections, I think the swing states in agriculture are Maharashtra and Karnataka, and there I think there's a lot of sowing happening, a lot of agriculture activities happening there. And the sentiment there is definitely very good,
Oh, okay.
Yes, price sentiment
Actually, running out of time, Harish, sorry to butt in, but Samiran, last word, second half rural demand, despite these last rains, despite the negative food inflation, you are convinced like Harish that things will continue to be buoyant in terms of demand?
As of now, our sort of synthetic index to track rural demand vis-a-vis urban demand is still pointing to the fact that rural is likely to outperform urban for the time being, barring obviously this festive season data, which we are still crunching to figure out whether urban has done better than rural in this brief period of festive season demand boosted by the GST cut. But I'm getting more convinced about this rural recovery being a more sustained one because it's now affecting things positively through the employment and the wages channel and not just dependent on the relatively more volatile agricultural part of things.
Okay. Well, that's good to hear. I think, was it you or Harish who used the word secular when you all said rural demand and rural employment? That is extremely positive if we are getting there. Thank you very much, both of you, for joining me on this very brief chat, but an optimistic one. The rural demand is likely to continue to be strong. I'll take a rain check from both of you, literally, and check out on the Rabi performance later and with Samiran on the urban demand once we get more solid figures for the October sales. We'll wrap up on Bazaar on that note. Chartbusters coming up.